Good evening, everyone. Today we're looking at financial reporting, FR, and our topic for tonight's class will be IAS 38, Intangible Asset. If you notice, I'll be taking non-current assets from the outset, which is I started from the IAS 16, then 36, which is impairment. Now is 38, which is intangible asset. Intangible asset is also a standard under non-current assets. And the scope of the standard. So follow me. Let's talk about what the scope of the standard. The standard applies to all intangible assets except one, those covered specifically by other standard. So there is some intangible asset that this standard does not cover. So one is talk about business combination, which is IFRS 3. So any intangible asset you acquired during your consolidation, during your business combination, such intangible asset, you don't use this standard to treat it. You use IFRS 3. Non-current asset held for sales. If there's any intangible assets held for sales, you will use this IFRS 5 to treat such an intangible asset. Once you have an intangible asset and it's not being held for sales, you don't use IAS 38. You now use IFRS 5 to treat it. Now, exploration and evaluation assets, which is IFRS 6. This is a mineral resources. You don't use IAS 38 on mineral resources. So you use IFRS 6 to treat any standard under mineral resources. Expenditure on the development and extraction of minerals. So similar to IFRS 6. Now let's go to the introduction to the standard. Let me summarize. Let me give you an insight to the standard, what the standard entails. IAS 38 intangible assets sets out rules on the recognition. So how will you recognize an intangible asset? You follow the standard. The measurement, how we measured an intangible asset, and what are those disclosures you need to disclose in relation to intangible assets. IAS 38 establishes similar rules for intangible assets to those set out elsewhere, mainly in IAS 16. Now, this IAS 16 is a standard that you need to understand very well, because most standards use the similar rules, similar recognition, similar measurement of IAS 16 in recognizing their own assets under their respective standards. So you need to understand IAS 16 very, very well. It was developed from the viewpoint that an asset is an asset. So there should be no real difference in how tangible and intangible assets are accounted for. Because this intangible asset, when they develop them, they said that okay, an asset is an asset. That's the reason why most assets, as long as it's an asset, be it intangible asset, be it a current asset, be it non-current asset, they follow similar rules set by IAS 16 in recognizing them. That means their initial recognition of all this standard, of all these assets, follows the recognition criteria of IAS 60. That means IAS 60 is the mother of all non-current assets. However, there is an acknowledgement that it can be more difficult to identify the existence of an intangible asset. So IAS 38 gives broader guidance on how to do this when an intangible asset is acquired through a variety of means. Because an intangible asset is very difficult for you to see them or touch them. So these standards talk about how will you recognize them, how will you feel them, how is okay, I have an intangible asset, you should follow IAS 38. Now let's talk about the definition of the standard. The definition of the standard. An asset. We said an asset is a resources controlled by an entity as a result of past events and from which future economic benefits are expected to flow to the entity. So this particular definition of assets is based on this standard, though some standards have defined assets in a different ways. For example, IFRS 16 has defined an asset. Now this particular phrase by saying must be owned is no more there, and so an asset must not be owned by a particular entity. An intangible asset is an identifiable non-monetary asset. It's an identifiable non-monetary asset without physical substance. So this they don't have a physical substance. That means you cannot see the door, touch them. The asset must be controlled. Before you can say it's an intangible asset, they must be controlled by the entity as a result of past events, sometimes from which the entity expects future economic benefit. So what are examples of intangible assets? You must know the examples of intangible assets: patent rights, copyright, license. So if government give a particular entity a license to acquire a particular asset, we say that license given to them is an intangible asset. Intellectual properties, that are technical knowledge obtained from development activity. Trademarks, including brand names and publishing title. So all those they are intangible assets. Motion picture films and video recording. So they are intangible assets. For example, now what I'm doing now, I'm doing a video recording. This video recording is an intangible asset. So it's my property. I can monetize it and recognize it as an intangible asset. Now, definition criteria. There are three major criteria for recognition as an asset. Now, before you can recognize an intangible asset, they must follow these three major criteria. We say 1, control; 2, identifiability; then 3, future economic benefit. So they must follow these three major criteria. What is control? By the standard defines control, which is different from how IFRS 10 define control. Control means the power to obtain the future economic benefit from the underlying resources and the ability to restrict the access of others to those benefits. So though it is similar to the one defined by IFRS 10. Consolidation. So say control normally stems from a legal right that is enforceable in court of law. So this is what the standard defined by control. However, legal enforceability is not a prerequisite for control, as the entity may be able to control the future economic benefit in some other ways. So the expenditure incurred in obtaining market and technical knowledge, increasing staff skills, and building customer loyalty may be expected to generate future economic benefit. So you might not control them. You might not control the customer loyalty, but they may serve as what? As an intangible asset. So this is why we are saying you may not have a legal right over them, but they may start as your intangible asset. So you should be able to understand this. Now, identifiability. An intangible asset, whether generated internally or acquired in a business combination, is identifiable when it's one is separable or arises from contractual or other legal rights So future economic benefits. What is future economic benefit? This may include revenue and or cost savings. Evidence of the property that economic benefits will flow to the company may come from one. Market research. 2, feasibility studies. Then 3, a business plan showing the technical, financial and other resources needed and how the company will obtain them. These are future economic benefits. Now, possible accounting treatment. So let's look at the possible accounting treatment. How will you treat intangible assets? Normally, an asset or any expenditure has 2 major ways in which you can treat them. One is either you treat them as an asset. So if you incur any expenditures, you spend any money, a business spend any money, how will the business treat that fund expended? You said one is either you treat that money as an asset or you treat that money as what? Expenses. If you say assets, we mean to capitalize them. And if you say expenses, we mean to expense them. It means to expense them in your P&L account. A business does not incur costs specific to the creation of goodwill, but for related activities. Promotion, e.g. promotion, client service, quality control. Such costs are expense as incurred. An entity cannot recognize internally generated goodwill as an asset in its financial statement because it does not meet the definition of an intangible asset. It is not identifiable. In particular, it is clearly inseparable. It cannot only be disposed of with the business as a whole. With the business as a whole. However, when a business is acquired as a whole, the buyer will pay a price in excess of the fair value of all assets and all assets, that is net of liabilities, that can be separately identified. So we are saying that an asset, that is a goodwill that is being generated internally, is not recognized because so when you incur any amount of money in order to generate goodwill, you say the standard prohibits internally generated goodwill except the one in business combination. Recognition criteria for intangible assets. What is the recognition criteria for intangible assets? If an intangible asset satisfies the definitions, it is not necessarily recognized in the financial statement. In order to be recognized, it must satisfy the recognition criteria for intangible assets. Now, it must satisfy the the recognition criteria, which is the initial recognition criteria, which is those three keys, but it must also satisfy this other recognition criteria. To say one, an intangible asset is recognized when it comply with the definition of an intangible asset. It must comply with the definition of intangible asset. It must not be seen. It must not have a physical substance. 2, meet the recognition criteria set out in the standard, which are 1, it must be probable that future economic benefits perfectly attributable to the assets will flow to the company. I mean, before you can say it's an intangible asset, it must have a future economic benefit that must flow to the entity. 2, the cost of the asset can be measured reliably. The profitability of future economic benefits must be assessed using reasonable and supportable assumptions that presents management's best estimate of the set of the economic conditions that will exist over the useful life of the asset. The recognition criteria are broadly the same as those specified in IAS 16 for tangible non-current assets. Let's talk about measurement. An intangible asset must be measured at cost when first recognized. Means of acquiring intangible assets. A company might obtain control over an intangible resources in a number of ways. Intangible assets might be: how can a company acquire or have an intangible asset? We say 1, through purchase separately. That means you can purchase an intangible asset from another company. That means a company must have a license to import a particular goods. For example, now the one given to Dangote, in which Dangote has the license in those days to import rice. So such license given to such company is an intangible asset. Now, if another company wants to have such right, it can purchase that right from Dangote or any company given the license by the government. So the amount paid will become an intangible asset. 2, acquired in exchange for another asset. That means you might not pay money. You might give another asset. For example, you might give a furniture, a non-current asset, a tangible asset, to acquire an intangible asset. Give it to a company by way of a government grant. Now, government can give you an intangible asset by way of a grant. Internally generated. Now, you can also have an generated intangible asset. For example, a software. So a company can build a software that will use to run its business efficiently. So such generated software is an intangible asset. 5, acquired in a business combination. So anyone that is being acquired in a business combination is what? Is an intangible asset. I-38 provide extra guidance on how the recognition criteria are to be applied and or how the asset is to be measured in each circumstances. Now let's look at initial measurement, which is cost of an intangible asset. Intangible assets should be measured initially at cost. An intangible asset must be acquired. So all these are so how we can acquire them separately through during business combination by government, and we can purchase them from the government. You can also acquire them through exchange of assets. Now all this separately. All this separately. All this separately. So separately, which is separate acquisition. Now you can follow the principle of IAS 16 to recognize an intangible asset acquired separately. One, the acquisition of intangible assets can usually be measured reliably when it has been separately acquired. So example, purchase of computer software. The cost is measured according to the same principle applied in accounting for other assets. For example, so you can use the same initial cost of a current asset, of a current asset or a non-current asset, so such as the one you can follow the principle of IAS 2 or IAS 30 or IAS 16. Now you had the purchase price, you had the import duty. So in your exam, if you are giving the purchase price, you had the purchase price. If there's any import duty, you are told that there's a tax, and if there is also a non-refundable purchase tax. So any tax that is told you is non-refundable. Any tax you paid during the purchase of that asset, you had it with the cost of that asset. If there's a deferred payment are included as cash price equivalent, and the difference between this amount and the payment might be treated as interest. So when you said okay, the money will be paid in 2 years time, in 3 years time, such deferred payment, you must look for the present value of such a deferred payment. So it is said the money is 5 million, and 5 million will be paid in 2 years time, 5 million will be paid in a year's time. You don't recognize that 5 million as the cost of that intangible asset. You must look for the deferred consideration, the present value of that amount, except you pay that amount once. If you say they pay that amount, it was paid, fine, it's a purchase price. But if they say the purchase price, it will be paid in 2 years time or in a year's time. So you must look for the present value. As with other assets, the expenditure that would not be now, and as with other assets, the expenditure that would not be classified as cost include the following. So all these are not part of the initial cost of an intangible asset. They are not part of your initial recognition of an intangible asset. So the standard exclusively and lists all this. So when you see this in your exam, please don't include this as the initial cost of an intangible asset. One, introducing a new product or service. So the cost of introducing a new product, for example, a company wants to, your advertising, your promotion. So when a company wants to introduce a new product, they now advertise. Such costs, when they incur during advertisement, should not be part of the cost of what, of the intangible asset. Two, conducting business in a new location with a new class of customers. So when you want to conduct a business in a new location because of an intangible asset, you don't put this cost as the cost of that asset. Administration or administrative and other general overhead. So all these administrative costs like depreciation, insurance, stationaries, salaries and wages of administrative staff, all this for like accountants and the rest. You don't put those, such costs are not part of the initial recognition. Please take note. Initial operating costs and losses. So any operating costs and losses is not part. cost incurred while an asset is capable of operating in the manner intended has not yet been brought into use. Such cost is also not part of your what? It's not part of your initial recognition. Cost incurred in redeploying the asset. Please, this cost is almost similar to that of IAS 16. Please, this cost is similar to that of IAS 16. So when you redeploy, you are told that a staff will redeploy to a particular place because of an intangible asset. That cost of redeploying is not part of the initial cost of an asset. Now let's look at the illustration, maybe to buttress our explanation so far. Now, the Junk PLC is an incorporated entity. On 31st December, it acquired the exclusive right to a patent that has been developed by an entity. The amount payable for the rights was 600,000 immediately. So you are told that they pay this amount immediately. 400,000 in 1 year's time. So you are told that they will pay 400,000 in 1 year's time. That means the total amount of the purchase right is 1 million naira. They pay 600,000 immediately, and they will pay 400,000 in 1 year's time. The John PLC has incurred legal fees of 87,000 naira in respect of the bid. So they incurred a legal fee of 87,000 naira. The John PLC operates in a jurisdiction where the government charges a flat rate fee and a stamp duty. So the government charge a stamp duty of 1,000 naira for the recognition of patent rights. So the stamp duty is the John PLC cost of capital is 10%. So you are given the cost of capital. You are required. Calculate the cost of the patent rights on initial recognition. Please, initial recognition is the cost that will be capitalized. It's the cost that will be placed in your financial position, which is your balance sheet. So what are those costs? So suggested solution. Now the cash price, which is the purchase price, the one paid immediately, is what you add it. It's 100,000. Now the default condition, which is the one that we pay in 1 year's time, and the 1 year's time own is by the formula is the future value, which is the one that we pay in the future, over 1 plus R. The R is your cost of capital. 1 plus R. So by the time you impute that, the future value is 400,000 over 1 plus 1.1, which is your cost of capital. So by the time you punch your calculator, you find out that the answer is 363,636 naira. Your legal fee is also part of your initial recognition and your stamp duties. So with this, your answers will be 1,051,636,000. So business combination, this is in line with IAS 3 business combination. So the standard also try to carve some elements out of that standard to include in a zone. So the cost of an intangible asset acquired in a business combination is its fair value at the date of acquisition, irrespective of whether the intangible asset has been recognized by the acquiree before the business acquisition. So you can also look at so you can acquire intangible assets through what business combination. So you can use this standard to treat it. So when you acquire through business combination, use your knowledge in business combination, your consolidation to treat it. So which is the cost of acquisition minus the fair value of the identifiable intangible asset. When you subtract it, it's your business combination, which is your goodwill. Government grant. Some intangible assets may be acquired free of charge or for nominal consideration by way of a government grant. So anyone be given free of charge by way of a government grant, e.g., airport landing rights, license to operate radio or television stations, import quotas, rights to emit pollution. These are rights given to companies. So all these rights is an intangible asset. So you can capitalize them as an intangible asset. Under IAS 20, accounting for government grant, and the disclosure of government assistance, both the intangible asset debit entry and the grant credit entry may be recorded initially at either fair value or cost. Now you can also acquire intangible assets through exchanges of assets. That means you can exchange an asset to acquire an intangible asset. The cost of an intangible asset acquired in exchange for a non-monetary assets or a combination of monetary and non-monetary assets is measured at the fair value unless one, the exchange transaction lacks commercial substance, or the fair value of neither the asset received nor the asset given up is reliably measured. That means if the exchange assets lack commercial substance, that means if the asset given up and the one received does not have a commercial substance, that means you can't identify the fair value in the market. So then you cannot write or you cannot capitalize any intangible assets. Now, what is subsequent expenditure? Just as your IAS 16 said, subsequent expenditure. So this also follows the principle of IAS 16. Intangible assets, in most cases, there are no additions to an intangible asset, or the replacement of parts of such assets. Most subsequent expenditure maintain the expected future economic benefits embodied in an existing intangible asset and do not meet the definition of an intangible asset and IAS 38 recognition criteria. So most subsequent expenditure, because you cannot actually say, okay, you are incurring them on intangible assets. You might feel that you are incurring an intangible asset, but you are incurring them on the business as a whole. Also, it is often difficult to attribute subsequent expenditure directly to a particular intangible asset rather than the business as a whole. Therefore, only rarely will subsequent expenditure be recognized in the carrying amount of an asset which is to capitalize. Normally, such expenditures must be written off through profit or loss. So most subsequent expenditures on intangible asset, because you cannot actually identify if it's on that particular intangible asset, so you will expense it. Now, the major challenges when it comes to intangible assets is research and development. So let's talk about research and development. The standard have defined research and development for us, and the standard says that research and development should be expensed. That means if you are giving in your exam research and development course should be expensed, except the development phase is only one that will be capitalized, while the research phase should be expensed. So let me explain more on research and development. Development costs can be recognized as an asset if they meet certain criteria. So you can only capitalize a development cost when they meet such criteria. Research activities by definition do not meet the criteria for recognition under IAS 38. This is because at the research stage of a project, it cannot be certain that future economic benefit will probably flow to the entity from the project. Now, when you want to construct a particular project, or you want to carry out a research on a project, the cost incurred up to the point in which it becomes successful, that okay, you've identified what you want to produce, then that cost up to that point should be expensed as a research cost. Why? From the point in which it's been successful, in which you have successfully identified what you want to produce, then from that point you start to capitalize such costs. There is too much uncertainty about the likely success or otherwise of the project. So all those costs up to that point should be what? Expense. Should be expense. Research costs should therefore be written off. As an expense as they are incurred. So examples of research costs. 1. Activities aim at obtaining new knowledge. So all activities that is being that is being incurred by an entity, you should what? Expense the research cost. The search for, evaluation, and the final selection of. So any cost incurred to the point in which a particular project is being successful, that is a research cost. Application of a research findings or other development. The search for alternative for material, device, product, process, system, or services. The formulation, design, evaluation, and the final selection of possible alternatives for new or improved materials, devices, products, and services, or system. These are examples of research costs. So in your exam, you might be told list research costs. Please, all this is what you should write down as your research cost. So development costs or development fees. Now, development costs may qualify for recognition as an intangible asset, provided that the following strict criteria can be demonstrated. So please understand this criteria for you to recognize development costs. So in your exam, you are given IAS 38. States the criteria for capitalizing development costs. So these 5 criteria is what you should remember. This is what you should write. What you should write. One, the technical feasibility of completing the intangible asset so that it will be available for sales. So there must be a technical feasibility that you will complete the asset. So once you have this, you can say, okay, this is a development cost. 2, its intention to complete the intangible asset and use or sell it. So there must be an intention to complete it, or to use it, or to sell it. So if you complete it, we use it or you won't sell it. 3, its ability to use or sell the intangible asset. So the company must have the ability to use or sell the intangible asset. 4, all the intangible assets will generate probable future economic benefit. So before you can say you want to capitalize intangible assets, they must generate a future economic benefit. 5, its ability to measure the expenditure attributable to the intangible asset during its development reliably. So examples of development costs. So the design, construction, testing of pre-production or pre-use prototypes and models. The design of tools, jigs, molds, and dies, including new technology. So internally generated goodwill. Please, the standard specifically prohibit this. So when you are giving internally generated goodwill, don't capitalize it, don't recognize it. It's not recognized under the standard. Internally generated goodwill should not be recognized as an asset. It's only those during business combination that might be recognized. Other internally generated assets. Now, other should be recognized. It's sometimes difficult to assess whether an internally generated intangible asset qualify for recognition. Specifically, it is often difficult to one, identify whether there is an identifiable asset that will generate probable future economic benefit. 2, measure the cost of the asset reliably. Internally generated brands, mastheads, publishing titles, customer lists, and items similar in substance are not recognized as intangible assets. So this specifically, the standard himself, please, the standard himself says these are not intangible assets. So please note that these are not intangible assets on their own. Measurements after recognition. So measurement after recognition, it also follow this the requirement of IAS 16. So you can use cost model, which is the cost less the accumulated amortization and any accumulated impairment loss. So intangible asset is amortized, it's not what depreciate. So it's not depreciate. So instead of it to say you depreciate an intangible assets, you will say I amortized an intangible asset. So it's like you use cost model or use what evaluation model. Evaluation, revalued amount being the fair value and the date of evaluation less any subsequent amortized amortization and any accumulated impairment losses. The useful life. What's the useful life? And intangible assets also have useful life. So the way a tangible asset has useful life, that is the same way an intangible asset has a useful life. Useful life of an intangible asset should be assessed as finite or indefinite. Should be assessed if it's definite. If it's what? Finite or indefinite. Useful life is regarded as indefinite when there is no foreseeable limit to the period over which the asset is expected to generate net cash inflows. Now, so when you say indefinite intangible asset or indefinite useful life, it means it does not have a specific useful life, so you cannot amortize them. What we will do as an accountant is to test for what? Impairment. What are those factors to be considered in determining useful life? Include one, expected usage of the asset, the typical product life cycle, the production information on estimates of useful life, similar types of assets that are similarly used. So you can use the similar asset or similar type of asset, technological, commercial, or other obsolescences, expected actions by competitors or potential competitors, finite useful life, like contractual or other legal rights. So the useful life of an intangible asset arising from contractual or other legal rights should not exceed the period of such rights, but might be shorter. What is amortization? Amortization is just like depreciation. So you follow this. The depreciation amount of an intangible asset should be allocated on a systematic basis over the best estimate of its useful life. Amortization begins when the asset is available for use. So when you begin amortization is one, when it's available for use, and amortization ceases and the earlier of the date that the asset is. So when we cease to amortize an asset or cease to depreciate an asset, earlier of the date which the asset is held for sales or derecognized. So anyone that is earlier. The amortization method used should reflect the pattern in which the asset's economic benefits are consumed by the entity. So residual value. So it also has residual value. So that the way we have it in your IAS system. Let's look at illustration 2. Illustration 2. Illustration 2. So under illustration 2, we say on 1st of April 2012, Brook established a new research and development unit to acquire a scientific knowledge about the use of synthetic chemical for pain relief. Pain relief. The following expenses were incurred during the year ended. So what are the expenses that are incurred? These three expenses are incurred. We say one, the purchase of building for 400,000 naira. The building is to be depreciated on a straight line basis at a cost of 4% per annum. So they incur the building specifically for the what? Intangible assets. 2, salaries and wages of research staff. 3, specific equipment cost of 60,000 to be depreciated using a reducing balance rate of 50%. You are required to calculate the amount of research and development expenditure to be recognized as an expenses, expenses in the year. So what are those ones to be expensed in relate to what? Research and development. I will one is the building. The building. So the cost of building will be capitalized as a non-current asset. Why the depreciation or will be what? Expensed, which is 400,000 times 4%. Why wages and salaries will be also expensed. Then the equipment, the division of equipment will also be what? Be expensed. Also be expensed. Now illustration 3. Illustration 3 is a little bit technical. A little bit what? Technical. In its first year of trading to 31st of July 2013, EcoChem incurred the following expenditure on research and development, none of which relates to the purchase of of property, plant, and equipment. So 1, 12,000 on successfully devising process to convert the sap extracted from the mangrove into chemicals. S, Y, and Z. 2, 60,000 on developing an energetic medication based on chemical Z. So you can read it up. No commercial use have yet been discovered for chemicals X and Y. The commercial production and sales of the energetic commenced on 1st of April 2013 and are expected to produce steady profitable income during a 5-year period. During a 5-year period before being replaced. Adequate resources exist for the company to achieve this. So all these are the recognition criteria for development cost. So they are told they will achieve that. They are commercial substance for the product, and we are told that it will generate income for 5 years. That means to generate income for 5 years means that intangible asset should be depreciated for what? 5 years. This is how you can know the useful life of intangible asset. You depreciate for 5 years. You are required to calculate the maximum amount of development expenditure that will be carried forward in 31st of July 2013. Now, very simple. Now, the cost of developing energetic medication, which is 60,000, will be capitalized as intangible assets. consider as an intangible asset, which is 60,000. Why the amortization of it, which is if you look at it, if you look at it very well, from the financial year end is July, and it was developed to become a commercial item whereby they will start to sell it in the market in 1st of April. From April to July is how many months? April, May, June, July, which is 4 months. So 4 months out of that means either you must amortize it for 4 months, and we have it's 5 years. This life is 5 years. So 4 months, which is 6 over 4 months over 60 months times the 60,000 is your amortization cost. So it will have the 4,000. When you subtract it, we have 54,000. This is your. Now you should note that the 12,000 is not capitalized. It should be expense in your profit or loss. Why? It relates to your research and your research cost, because it is the cost being incurred before to convert that item, before they will know if it was successful. So the indefinite useful lives. So you can look at this indefinite useful lives. Indefinite useful life. So an indefinite an intangible asset with an indefinite useful life is one. It's not amortized. You don't amortize an intangible asset. That is not doesn't have useful life. What we do, you test for impairment annually. Test for impairment annually. So you can look at the definition, the disclosure requirement. The disclosure requirements. So in the note you can read the disclosure. Look at what you must disclose relate to IAS 38. Yes, that's what are those things you must disclose. These are what you will disclose. What you will disclose. So please read up. If there's any question, you can ask me in our WhatsApp, or you state it, or you DM me in my own WhatsApp number. Thank you for your time. Good night.